Hey everyone, Coach Investor back to another video for you today. In today's video, we're going to talk about a company, a stock I've only covered once on this channel back in September, where the price was around $12. What is the price today? Well, around $24. Now, I'm not a oracle or something like that, but I did make a case as to why that company was misunderstood and pretty undervalued. Now, this company is called Build-A-Bear. Remember last video where you all thought I was joking when talking about this company? Well, no, it actually has a great business. And even crazier is that back in 2020, that COVID crash, the stock was close to $1. Right now, we're close to $25. So those that picked up some shares back then, well, you're up 25 times. So pretty good investment. But of course, during the pandemic, that business took a huge hit. After the pandemic or during the reopening, it obviously benefited from that. Now, overall, the business is doing much better, but the market still does not appreciate the value that this company is bringing to its shareholders or bringing to the market. So it reported earnings. It also declared a special dividend. It did not repurchase more shares during Q4, which is a bit of a shame, but okay, fine. They're managing their business pretty well, so I'm not going to complain there. If you're wondering if I own some shares, no, I only owned a couple of shares during that short period of time from a couple of days after I mentioned it on this channel, all the way through $22, $23 or so. You can actually see it on the portfolio on stockkart.io. Why is it not in the main portfolio? Because I thought, well, it went up, 80% or so, well, now doubling, but when I bought and sold 80% in a short amount of time, to me, that was good enough for a small position, so I'm happy with that. Will I consider entering it again? Maybe, but right now, as you will see in just a second, there is a huge gap when it comes to technical analysis. But first, this is the way, well, not an updated way the company is looking right now, but an overall overview. I believe this is going to be updated in the next 24 or I don't know, maybe over the weekend. But you can clearly see a path here. Free cash flow positive. I believe for 2023 it will be around $15 million or so, give or take a million or two. Return on equity is great, 54%. Gross profit margin is above 50% consistently right now. Price to sales ratio is under 1 for the next 12 months. So again, pretty misunderstood company there. Then shares outstanding, not only are they returning value to the shareholders with some, well, 2 special dividend payouts in the last 24 months, but they're also, well, giving you more value by repurchasing their own shares, as you can clearly see right here. So overall, pretty solid company. Now, when it comes to the graph, you can clearly see that last time, so I covered it right here at around $12, $13. You can see the huge run up there. Q3 earnings was another great quarter, big gap here. Then we went to $26, but since there is this unspoken rule that all gaps need to get filled, but not all gaps do get filled, this one was filled, well, a couple of months later. Now we've got this huge gap. It went from $20 to $25-ish. So we have that huge gap there. What is promising is that obviously you can see that rebound here just above that 200-day moving average. We're also right now, when you look at the MACD, we're in bullish territory. RSI obviously is now closing in on being a bit oversold. That's what happens when you jump 25% on one day. When the overall market is also down, you're really standing out. But overall, that's the technical and the major overview of the company. Obviously, we're going to have a look at the reported earnings for Q4 and full year. So if you're interested in all of that and want to hear more about companies that probably you haven't heard about before, investment opportunities, leave it a thumbs up, subscribe if you have not. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Much appreciated. So I'll start with a little comment here. So with the positive momentum continuing into the first quarter of fiscal 2023, we look to our promising future with an even stronger brand, an elevated digital and organizational infrastructure, a proven multidimensional strategy, and a motivated seasoned team committed to continue to drive shareholder value. If you want to learn more about the basics of the business, go watch that first video. It's going to be in the top right corner. Now, for Q4, total revenues were up 11.6% to $145.1 million. Net retail sales were up 10% to $138.2 million. Then consolidated e-commerce demand, so orders generated online to be fulfilled from either the company's warehouses or its stores, increased 0.9% compared to the same quarter last year. Now, when it comes to commercial and international franchise revenue, were $6.9 million, nice, an increase of 60.5% compared to the $4.3 million the same quarter last year. Now, with gross profit margin, that was 55%, an increase of 150 basis points from the same quarter last year. Gross profit margin expansion in 2022 fourth quarter reflected an increased merchandise margin, primarily driven by lower freight cost versus the prior year and leverage on fixed occupancy expense. Again, when it comes to profitability, very good here. Of course, when it comes to growth, you're not going to get 50% growth here or something like that. It's not a hyper growth stock, but it's a pretty good, solid growing one on a profit level, but also on the top line. Now, when it comes to the full year revenue, total revenue increased 13.7% to $467.9 million. When you look at net income, that increased 1.5% or $3.15 per diluted share compared to net income of $47.3 million or $2.93 for fiscal 2021. And when you look at EBITDA, that was $74.4 million, an increase of 18.1% or $11.4 million from EBITDA of $63 million in fiscal year 2023. Now, when it comes to their balance sheet, so as of January 28, 2023, cash and cash equivalents totaled $42.2 million compared to $32.8 million same quarter last year. Again, so they increased the cash pile there, which again, of course, you can ask why didn't they buy more shares when it was cheaper than today? Okay, maybe they want to have a healthier balance sheet, healthier cash pile. Makes sense, fine with that. Then when it comes to return of capital to shareholders, so during fiscal 2022, the company utilized $24.1 million in cash to repurchase 1.5 million shares of its common stock. As of March 9, 2023, the company had $46.9 million available under the $50 million stock repurchase program adopted on August 31st, 2022. As announced March 8, the company board of directors declared a special cash dividend of $1.50 per share that will be paid on April 6th to all stockholders of record as of March 23, 2023, following a $1.25 share special cash dividend declared on November 30th, 2021. So yes, if you have a question, and the question is, if I buy shares today, will I get that dividend? The answer is yes. All stockholders of record as of March 23 will get that dividend. And that's probably also one of the main reasons why the stock went up so much. Now, when we look at the outlook for fiscal 2023, they expect total revenue to increase in the range of 5 to 7%, with growth in all three operating segments. They're also going to open 20 to 30 experience locations through a combination of third-party retail and corporately managed business models, with the majority planned for the second half of this year. Now, with regards to the earnings call, I want to feature this question and answer here. So talk about housekeeping question. What's the share account going to be next year, assuming, I guess, no more share repurchases? To that, got an answer here. Well, it should probably be roughly similar to the number that we have right now, pending for some of the regular grants that people get, but that shouldn't be immaterial in a big scheme of things. So talk about stock-based compensation, maybe more hiring, etc. Shouldn't really change much on a year-over-year basis. And when it comes to the guidance of 5 to 7%, so they don't specifically talk about the e-commerce sales. They haven't done so for many years, but when they think about the growth that they're expecting for 2023, a lot of that growth they expect to come from their existing store base and productivity in those, as well as from some of the new stores that we just talked about, the 20 to 30 that they're going to open throughout the year. And so to conclude, nothing much to add here. Again, solid execution from this company. One of those companies that are really under the radar, probably many other companies out there with the same story. No hype surrounding it, pretty undervalued. Stock has done very, very well compared to anything else in the market, continues to execute correctly. Maybe I'll find some more companies. If you have some of those companies that are under the radar that nobody really talks about, that is pretty solid, maybe even undervalued, let me know down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.